Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, I'm going to keep this pretty short. I've been having audio issues on this thing this morning, so I'm sorry this is getting out a little late. This is my fourth one. Okay, yesterday, we had the big down day on Monday. Tuesday, the bulls take back the middle band. What I mentioned yesterday was that for the first time in a long time, the bears came right back and retook the middle band. And then yesterday, the middle band was never threatened. We took out the 33 level, which was important, and we traded as low as 30.75 and touched the lower band. So very tight bands. We expand out of the second to the third standard deviation. We stay there for 2 days. That's when you have to be selling. You cannot be on the 93s looking for 16.25 when we were at the third standard deviation band times 2 days. It's not sustainable. We're going to come back inside the bands. What happens after that, remains to be seen. What we now see is the bears have their best opportunity to ride the lower band. Now, if we collapse again today, if we get down into this 15.16 area where the third standard deviation band is on the downside, that's a buy. But inevitably, we will hear people looking for, 1498 to 1470 when we've already traded down from 1539 to 1416 and we're sitting on the third standard deviation band. Don't fall for that trap. Just don't. Those are the times when you need to be thinking about the other side rather than trying to jump on a train that you were not on in order to try to ride the last handle, and you end up shorting very deep in the hole. We have gone 1593 to 1530 at this point. We've done 63 handles. I think we're going to pop a little bit. If you're a bear, you don't want to lose yesterday's high, which is 53.5, and you certainly cannot lose the middle band again. 53.5 to 59.5, if we go up and do that level, is a really nice area to put some longer-term swing shorts back on. If we go down and test yesterday's low and we find some support there around the lower Bollinger Band, that's a place where you can start to think about getting long. There's two things that are going to affect the tape today. You've got options expiration, which isn't the mysterious animal that it used to be, at least not in my opinion. And you've got what's going on in Boston. I think everybody is watching their screens and they've got their other eye on the television, or they're listening to the police scanners or whatever. Don't think for a minute that's not going to affect the tape. Logically, should it affect the tape? No. Does it affect the tape every time we get into one of these situations? Yes. So just be mindful. If you've been short this week and you've had a good week, you absolutely should be taking profits. You should have been taking profits yesterday. If you haven't been taking profits, you need to take some profits now. I'm not saying jump out and exit, but I am saying take some profits because you've had a good week. In looking at the pivots, we've got double pivots 9-day and 20-day up at yesterday's high. They're sitting at 1553.67. So I think the 53.5 area, if we start to rally, is a natural area of exhaustion. It's going to take the bulls a lot to get through 53.5. We've got daily pivot is right where we are trading. It's where we've been trading pretty much all night, 1540 half. The 3-day pivot is at 46 quarter. That doesn't excite me too much. 45-day pivot is still underneath us, 1537.33. The 45-day pivot was big yesterday when we broke the 45-day pivot and we broke what was my lower level yesterday, 38.75. And came down and tested that level and converted that. That's what opened up the 33 and the move down to 30. So keep an eye on that. And everybody have an amazing day. Mike Vacchi, PrincetonTrader.com for NTMarkets.com. Have a great weekend. I'll be back Monday morning with another webcast. Trade them well, everybody.